Good morning, everyone. This is Murphy Alexis Murray. I am shooting a video for National American University. This is for the course Accounting and Finance for Managers. And this morning we are going to talk about a description of purpose. We are with JHML Shipping Company, and I wanted to say good morning to everyone. Welcome to our quarterly earnings meeting for financial clerks, drivers, and support crew. And let's get started. Please check that the following items are at your seat, that you have a pen, paper, and a slide printout for your notes. And we will be going through each slide as instructed, along with a description of references and a question and answer period at the end. So today we are going to talk about a number of financial items. They include balance sheets, income statements, cash flow statements, and financial ratios. Balance sheets are the documents that show where the money fits into all of our categories, i.e. expenses, sales, profit, taxes, dividends. Income statements are going to show us how much money comes into the company. So for drivers, when you turn in your receipts and you let us know what you collected and how much you collected, that goes on the income statements. For my financial clerks and support crew, the cash flow statement is going to show us how the money is used and which purchases are made for things like new tires on the trucks, office equipment, pencils, pens, presentation work, and then we're going to talk about financial ratios. Financial ratios show how the money factors into different choices and our business decisions. So balance sheets. Balance sheets show how much money comes in through new accounts, sales, and departments. Our repeat clients make up the bulk of our accounts, and they keep coming back to us because we at JHML Shipping, we love our people, we love what we can do for them, and we love knowing that when they have a crate or they have a freight less than a truckload, that they call us and they trust us with all of their purchases. So for our company, these accounts have monthly invoices and they are checked every 30 days. They are checked to make sure that things have been paid, and they are checked to make sure that our clients are happy with what we offer. So for our drivers, you guys often collect payment upon delivery, especially for our cash on demand clients. You pick up those checks and those payments, document them in our slips, and then we process them here at the office. And the payment is processed by our wonderful financial clerks. Woohoo for the clerks! You guys are awesome. Income statements. They are going to show us how much money is collected overall from each account each month. Income statements are important because accounts must be collected on time. We as a company have an office to pay for, there are bills to pay, there are new insurance rates that need to be adjusted. Payments are billed on a prorated basis. So for our return clients, they come back to us because they know exactly how much we are going to charge them per crate, per weight. Overdue accounts are billed with interest. That way we cover our expenses if somebody is late. Collection turnaround is usually within 45 days. So we process everything, prorate it, bill it. Something becomes overdue, something becomes out for collection, we are going to let our clients know, hey, we need to pay our electric, we need to pay for water, we need to cover our assets and our rent because things cost money. Collections is also a big area for improvement. Our turnaround time is 45 days, but with dedicated work and dedicated people, we can process that within a shorter time period, probably 35 days if everybody gets on it. So clerks, if you know that you have somebody that has an overdue account, give them a call. Let them know, hey, look, I'm looking to make sure that your account is within proper amounts, and I'm looking to make sure that I can bring home some wages and that the company can have a great possibility of a future. Cash flow statements. So we put together cash flow statements because we want to know how the company profit is used. So our $1,400,000 must cover the office rent, utilities, vehicle insurance, gas for the trucks, driver expenses, and payroll. These costs vary month to month. The most difficult to predict is the amount of gas and drivers, what your expenses are. Because you guys need some money for food. You guys need money for snacks. You guys need money for overnights at the hotels. And if we don't collect all of that, then we might have to scale back. So market prices of gas are determined through regional rates and state taxes, and this is one of the biggest things that we cannot predict. How much money and how much gas is actually going to be spent taking a piece of freight from the loading area into the client's hands. Driver expenses must be carefully tallied and predicted. We usually can predict those through what our stipend rates have been and evaluate through previous submitted receipts, which is why drivers, we need to make sure we get everything back here on time so that way you guys can be paid. So after collection, when a person collects a piece of freight, we have money and checks that are taken into accounting and deposited weekly. Total amount into company account minus operating costs minus office expenses equals profit. Last month, our account balance was at $2,500,000. $750,000 of that was operating cost. Office expenses was $150,000, and that left us with the balance that you heard before, which was $1,400,000. On to our next slide. These calculations go into our financial ratios, and these calculations tell us how effectively our money management is working. Last year, we found a small profit of 0.7% compared to a break-even point of 0.40%. This ratio is calculated from our profit minus monthly expenses. We divide that by 365 days in a year, and we multiply that by 100, and that equals the percentage amount. The biggest help in improving the ratio between last year and this year, it came from billing and auto pay options, which has been extended to our clients, and they are pleased, happy campers. So keep that up, clerks. We are going to offer more in the future. So in conclusion, I hope this presentation has helped define the 4 key areas of company finances. I hope this has also explained how the connection between the drivers turning in reports to the clerks then goes to our wonderful financial officers who deposit the money into our accounts, which gets used by the executives, and they write the checks that pay the bills. I hope it shows how the process has improved throughout the work of AutoPay and technology investment, and that money is being spent wisely and not wasted because the receipts and expenses are being calculated and tracked. So everybody make sure that your logs are in your logbooks. Everything is accurate and truly reported. All receipts are turned in because those help decide if we can put more money into stipend account, if we can invest more in newer equipment and better technology. Thank you all for coming. And in this reference guide, we have wonderful information which was provided by Gitman and Zutter, by Mr. Terrence Peters, and by Mr. Revsine and Company, and that they are all wonderful financial reporters and great authors. Thank you. Have a wonderful day.